The Fed hiked 25 basis points as expected, and the markets dropped, as well as Bitcoin, even though they knew that the 25 basis point rate hike was coming. Why is that? Why did the market sell off on the news? And where are we now? So Dow finished down 1.63, the S&P down 1.65, the NASDAQ down 1.6. And what happened today was Chair Powell came out and raised, that the committee decided to raise 25 basis points, and he indicated that the financial conditions are tightening. And he also indicated that the markets have not adequately priced in the tightening that is going to be a result of contracted lending due to the banking situation that's going on. So, and he also said that inflation is still way too high. They still have a lot of work to do, kind of like we expected. The inflation is still too high, labor market is still too tight, and they're going to have to continue to fight inflation. He did indicate that there is potentially one more rate hike in the cards, and they're going to be data dependent, meeting by meeting. And obviously what can be expected is if the inflation is still high, they're going to keep hiking. And as long as nothing else is collapsing in the economy, nothing breaks that's major, like the banks, that showed a little stress, that was not an actual break. That was just, a couple of isolated cases that they were able to deal with. But he did say that the overall environment will be punitive for lending, which is going to result in slowing of the economy more than the markets are pricing. So financial conditions seem to have tightened, and probably by more than the traditional indexes say. The question for us, though, is how significant will that be? What will be the extent of it, and what will be the duration of it? Powell said, we'll be looking to see how serious this is, and does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic event, and we would factor that into our policy decisions. So on one hand, he's saying markets are not pricing in the potential damage to come from the tightening of financial conditions that we're seeing. But at the same time, if it does do some damage, then that's going to have an effect on our on our policy decisions. So, he's trying to be dovishly hawkish or hawkishly dovish. I don't know which one that is, but I think he came out as dovish as he possibly could. He didn't want markets to completely collapse, but he basically sent a shot over the bow and said that you guys are a little bit ahead of your skis in terms of what's really going on out there. He's reiterating what I'm saying to you is that what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. I think depositors should assume that their deposits are safe. Now, he said that, and then on the other hand, apparently Janet Yellen came out. I don't know if we have the news yet. It sounds like she came out and said that they're not going to consider changing deposit insurance at this time. I can't find that article. I'll have to come back to that again. But I think there's something out there where Janet Yellen has said that they're not going to raise the deposit insurance limits right now, that they're not doing a broad guarantee of deposits, but at the same time, they're saying that deposits are safe. So that kind of weighed heavily on banks when that news came out, and the market kind of reversed on that. So I think, the messaging to the markets, ended up sinking in, especially once those things took off. So here is Janet Yellen testifying right now, and she didn't have really good answers the other day, and I think that's where that soundbite came out of, was her testimony today in terms of that deposit insurance. So we're just going to have to keep an eye on that, see what comes out of that, and what those guarantees are going to potentially look like. So let's go ahead and jump in. We have the daily moving averages. Here's Bitcoin right here. We are expecting a broad pullback on Bitcoin. Obviously, the first level is that right in this 26.9 area where it's currently finding support. When that breaks, then we're down to that 24.250 area. Again, this area between 24.8 and 24.2. And if that does not hold, then you have your next support levels down to 23, then again down to 22, and then back down to the 200-day moving average, which is basically running at about 20,000, depending on what price action does. It could be around that 20,000 area, which will be the ultimate test of support. Bitcoin, or the Dow Jones, has lost the 200-day moving average. NASDAQ still not quite back down to check that 200-day moving average. The S&P stopping right on the 200-day moving average. So the big question is, will it hold support tomorrow, or will it go ahead and break through, take out that last low of 3,800 on the S&P before looking for more downside? Several analysts are saying the only thing that has really saved the stock market to this point from reaching testing, and maybe setting new lows was the bank crisis, because again, the narrative was that the Fed is pivoting and is going to start cutting rates, what the Fed said today. The other thing that the market's looking at, not only did Powell say, look, you're not taking into consideration the tightening that's already happening due to the interest rate hikes that we put in place and the fact that we're going to keep hiking. But he also said that, we're going to keep rates higher. We're not going to cut anytime soon. So what he said was, we have tools to deal with issues that could arise, but we're not going to back off. So it's still higher for longer. They're going to still continue to hike rates, and they're not going to back off anytime soon. So those were the messages sent to the market today, and that's why the market's reversed. VIX coming off of that 19, that 20 level, basically reversing back up. The Dixie finding a little support right in that 102 area. The 2-year dropping, and the 10-year dropping, but again, finding support in these areas here. And of course, oil has found support at $58 and is making a run back up. So we'll see what happens with oil. We have projections all over the map for oil right now, what's going on there. Global demand, things like that in terms of, why oil is dropping. If you look at some of the altcoins, the altcoin market, Ethereum, everything pulling back, across the broad markets. XRP completely reversing this little pump yesterday. A lot of people were getting excited here and started calling for, big numbers on, XRP and everything right now. But all of the altcoins are all reversing right along with Bitcoin. The question is, how far will this reversal go with Bitcoin? Is this going to be a much broader pullback back down to the $22,000 range and pull back into that area of consolidation there, and hang out for a while and just kind of bounce around in there until we get some more news and see what markets are going to do, which is probably a likely most probabilistic scenario, as it could drop down and really range in that $21.5 to $25,000 range for a little while before dropping back down and hanging out at that $18,000 to $20,000 level before potentially going down and retesting the lows that were set back in November. So that's kind of what I am looking at right now. And again, everything was as expected. Powell raised rates, said that we're going to keep raising rates. We're going to stay at the inflation fight. We're not going to be cutting anytime soon. And that financial conditions, as opposed to last time when he said, he said financial conditions had tightened somewhat, even though they were loose back then. But what he's saying now is, markets, you're not listening. Financial conditions are tight, and it's going to have its effects on the economy that you're not pricing in. So we'll see if this continues through the rest of the week, or if the markets digest everything the Fed said, and we can continue looking for more momentum or a basing of prices in this area in the near term. So that's what I'm looking at. I'll see you in the next video.